So look, we need to talk about China and the impending crisis and the collapse of the whole Chinese economy, because I think I found a simple fix. Now, you've probably heard in recent days that China has a lot of problems. It lowered its growth rate estimations for this year. It has a huge consumer confidence crisis. Exports to foreign countries are down. Trade relations are well in the shitter. And let's not brush over the huge debt crisis, especially in the property sector. What does this all mean for investors like myself who own a decent sized position in companies like Alibaba? Should you sell Alibaba? Should I sell Alibaba? And how the hell does China fix this? Because there is an easy solution within the economy. It's just a question of how do they trigger it? Now, a couple of days ago in our Discord, we had a live chat, and there was a lot of people on one side and a few people on the other side. The few people being the people like me, bullish on China. Yeah. Idiots. The people on the side who are negative against China, I agree with pretty much every single point. There is some negative things with China. From Looking Coffee lying about numbers, the worries that the other numbers in companies like Alibaba are not legitimate, all the way to them spray painting crops to look like they're busy. And my retaliation to this argument was all governments pull wool over their consumers' eyes. I mean, the US is running a fantastic economy right now, stock market's on its way up, and everything seems under control, other than the record that has just been broken about this homeless crisis. Congratulations, Joe, on the new record. But the big problem is, it's not the US versus China. I kind of picked the wrong argument, and if you want to see these arguments play out, by the way, there's a link to a free Discord down in the description with Stock MVP, and if you want to unlock my personal room in there, just check out Patreon or become a YouTube channel member. I'm going to give out my price target for Alibaba there next week, along with some other stocks I'm currently looking at stateside. Now, not to brush aside the bad exports, the lower estimations of growth, and the problem with the property sector, because all these can be fixed with one simple thing, like I said. Now, the biggest problem within China is actually none of this, because a lot of it could be fixed if they just get consumers spending. And it's probably easier than fixing a US problem if the US does have this problem in the future and inflation goes up again, or interest rates stay high and money dries up. Now, the Chinese people have been locked down for basically 2 years, maybe even a little bit longer in certain provinces. What happened in the West is when we were all locked down, we went on Amazon and bought shit, right? Now, in China, they're a quite different culture to us in the West, and I think that's kind of an understatement. They didn't really go out splurging on Pokemon cards or some bogus NFT.
Pokemon is one of the best investments you could have made.
A lot of people saved, and as the lockdowns opened, everybody expected this sort of revenge buying to take place like we've seen in the West, like we've seen in the UK, France, pretty much every Western economy. And that kind of drove inflation to record highs. It made then the Fed increase rates even higher, and it caused this spiral of effect that we're in right now. And that's one of the reasons why people now are seeing the penny pinch in their wallets, because they got greedy and started buying shit they didn't need. In China, it hasn't been that. There hasn't been that much revenge buying. In fact, many analysts say that the revenge buying, or that trade, is now completely over. And the proof is in the pudding, because if we go on this Deloitte report, the Chinese per capita savings rate has gone up to 35%, which is basically the percentage of disposable income a person is currently holding. And to put that into perspective terms, a Chinese person is holding 35% and a US person is holding about 4.1% on current data, which is a huge mismatch, meaning the US consumer is spending and the Chinese consumer is not. But it also means that the average Chinese consumer has money laying around to spend. They're just saving for the sake of saving because they have a negative outlook. Now, this is kind of a tough one to solve, because if the Chinese government, the CCP, can get that consumer spending that money, then the economy in pretty much every sector will start to thrive again. But it's a catch-22, because the Chinese government just lowered interest rates by 10 basis points. Now, I think that probably has to come down by at least 50 basis points to even have any form of impact. But it kind of is a catch-22, because if they lower the interest rates, people might start borrowing more money on things like property, which would boost the property sector. But China's spent a long time trying to sort of lower and limit the growth rate in that sector itself. And the property sector has been a huge driver for the Chinese economy in the past, but I think China's proven now they don't want to rely on it too much in the future. But lowering of rates itself, even if people didn't go and get mortgages on property, let's say they've just lost all appetite for that, it doesn't mean they're gonna go and spend more money either, or borrow more money in fact, because they have cash on their account. It just means that things are cheaper within the economy. It could help businesses like Alibaba, Tencent, Neo, and so on, but I doubt it would help too much the actual consumer. If China can figure out how to get that consumer confident again and spending, then the rest of the economy will fall in line and we will see growth again in China. But until then, until they figure that mess out, China's pretty much gonna stay where it is, or maybe even fall further. I recently watched this video about an economist who went to China recently and sat down with 30 big businesses, and he came out and said the same thing. People have got money on their account, but the consumer confidence is just way too low. He did also state though, China is kind of at a bottom. How further can it fall? What other negative catalysts can there be other than an all-out war? In which case, well, we're all pretty screwed anyway. So on investing in China, the question I asked in the chat room was this: in 10 years' time, will the Chinese economy be bigger or smaller than it currently is? If you answer yes to this question, move on to question number 2. A lot of people didn't want to answer it because I think they all know that in 10 years, the Chinese economy will definitely grow. They will fix this problem. The people are just not going to disappear. And I think, if anything, they've proved that there's not going to be a civil war in China. It's probably more likely to happen in France. And question 2 is the big one. Do you believe the numbers coming out of China? Do you believe the financial statements, the numbers, the unemployment rates, everything? Because if you don't, you shouldn't be investing. And that leaves me to this simple statement. If you answered yes to these 2 questions, it doesn't mean China's still a good investment, because you should be holding it for more than 10 years, because it's gonna be a bumpy ride. I don't want to go in too much about my thoughts on when Alibaba or China will recover, because I'm going to save that to the Patreon newsletter next week. But I will leave you with this. China's in a bad way. Their economy reflects the current things that are going on in its economy. The current market has shat itself because the economy is in turmoil. Would you say things in the US are brilliant right now? As the stock market rallies, Apple is near all-time highs, and confidence is starting to look a bit better. Interest rates are high. The average person can't afford that much stuff. And the big one, has inflation really disappeared? Is it going back down to 2%? I don't think so. In fact, I think inflation's about to creep up in the US very, very soon, and I explain why in this video. If you want to have a debate, be civil down in the comments. See you in the next one.